Welcome to Markets Now. I'm Michelle with Kemp Beadle of Paradigm Futures. Well, it was a mostly lower day in the grains, except for old crop corn and the livestock futures, cattle making some fresh highs with hogs pulling back. Let's start off talking about the grains. First of all, like I said, mostly lower in the corn, except for the nearby contracts. We saw the bull spreads working. And so, despite tariff fears and everything else, demand is still looking strong, right?
Yeah, the marketplace is certainly worried about tariffs, and that's why we are so far off of our, highs that were above $5 in corn. However, the world stocks to use is still exceptionally tight. Your stocks to use ex China is probably the second tightest since 1995, 96. And our demand at these lower prices continues to run very, very strong. We had another good ethanol grind this week with 1.1 million barrels per day of production. We've continued to see strong exports. Monday's export inspections was good. On Thursday, we expect another strong week of export sales once again. And conversions into livestock continue to run good with the strong cattle, and even with the pullback in hogs. There's money being made in hogs right now. So it just all adds up to a very, very strong demand situation with prices relatively cheap. We just kind of see the path of least resistance certainly not being lower.
And it looks like new crop corn, that's a whole nother story because these larger acreage estimates and some of the surveys that are coming out are weighing on that contract, aren't they?
Yeah, there are some surveys that are north of the USDA Outlook Forums, 80, or excuse me, 94 million acres. I think I saw 94 and a half, and maybe one a little bit north of 95. Um, in our analysis, we're going to take the under on this. Okay. And there's a very significant reason for that, and that is that quite frankly, there's no money to be made in corn at this price. So we think that when you have an overall grain situation in agriculture where corn doesn't make money, soybeans don't make money, wheat doesn't make money, um, that's an environment where you have a tendency to see some pullback in actual outright acres. And what that means is that your fringe acres tend to go back into pasture grass. Your acres that are a little bit more difficult to farm don't get farmed, and you put all your eggs into the basket of the acres that are the easiest to produce and the most productive.
Yeah. So you've been seeing some pressure today, and obviously we still have tariff concerns, but the market right now is also being held up on the flip side of that by less acres and strong basis levels in Brazil, right?
That's correct. Brazilian basis right now is somewhere between $1 and $1.25 higher than it was on this date a year ago. It's already well over $1 off this year's lows, which were made in January. And, it's a very interesting situation when you consider that, we're talking about what is projected to be a record Brazilian soybean crop. And so, there's a couple of things. I think number one, I believe that the production ultimately isn't as large as what everyone thought that it was going to be. Of course, there were 180 million ton estimates in January, and we're now focused back around 170 million tons or less, and that's a little bit different situation. But it's possible that that number comes in a little bit lower. Keep in mind, we're still filling pods in Paraná and in Rio Grande do Sul, and the weather has been less than cooperative, and so we may be having a little surprise in front of us, and certainly the cash markets are acting as if there just aren't as many soybeans as what many people thought there would be.
Yeah, well, hopefully that'll hold up here. And we're going to get maybe some help in the new crop from lower acres at the end of the month, you think?
Yeah, I mean, we absolutely agree that there's going to be a shift. All right. Now, for many farmers in the Midwest, rotation is king. Okay, so you're going to have beans planted on corn acres and corn planted on bean acres, and that's just a normal situation. The question is how much corn on corn are you going to see and how much shift are you going to have? Now, we absolutely believe that corn profitability is better than bean profitability, but we're talking about not profitability, but we're talking about less loss in corn than we are in soybeans. And so, like we said, we're going to lose bean acres. We kind of agree losing 3 million acres, and it could even be a little bit more, but we don't think we're going to get that many corn acres back. What's really interesting about this in soybeans is that at the Outlook conference, we took the soybean carryout down to 320 million bushels. We really only have about a half a bushel an acre of tolerance for yield loss. And that half a bushel an acre, by the way, 52 and a half million or 52 and a half bushels an acre, if you were to drop that to just 52, which is a record, you've basically taken away all of the cushion in soybeans to pipeline minimums. And so, we honestly believe here at $10 a bushel plus or minus that, we don't have a lot of adversity priced into the marketplace.
Very true. Okay, the wheat market, we consolidated here today. Did we run up into chart resistance, or is there a perception that at least snow is moisture for that crop?
Yeah, so yes to both. As far as the chart resistance goes, both Minneapolis and Chicago were running into resistance at the 50 and 100-day moving averages. And we've kind of banged against that for the last couple of sessions. And we fell back a little bit. But it was the Kansas City market that was actually the weakest today. And we saw a little of that earlier. We closed well off of the highs just on Tuesday because of the indications that we were going to get some of this moisture. And now that moisture is starting to fall, and you see it on the radar. And any moisture is seen as beneficial. And so, the Kansas City market rallied the most on this rally. It's kind of giving the most back on the break.
And what about the cattle market? Live cattle making some fresh for the high moves. We made all-time highs again in these feeder markets. Were we trading weather, or are we gearing up for that bullish cattle on feed?
So, as far as the cattle on feed report, the average trade estimates indicate that, we're anticipating, a continuation of what has been in place for a long time, which is just, not quite enough cattle in order for us to, shake the bullish underlying fundamentals. But we do have the weather that's in the plains, and markets always get a little bit excited about weather. We also had a stock market that turned around a little bit today, and it's interesting. We didn't see the cattle market break on the weakness in the stock market here earlier in the week. Now we're getting some recovery, and that recovery is actually helping the cattle move higher as well.
Yeah. And the stock market kind of breathed a sigh of relief. We kind of thought interest rates were going to be left unchanged by the Fed, but I think
Mhm.
maybe even some of the after comments from Jerome Powell probably helped the market stabilize.
Yeah, yeah. Chairman Powell is taking questions, and right now uh, he's still essentially telling us that there are two rate cuts that are coming. There was some concern that maybe that number might change. Um, there's been enough weakness in some sectors of the economy that uh, there's they're not taking rate cuts off the table, and I think that gave the equity market a bit of a sigh of relief.
Yeah. Well, the hog market didn't care. It was down for the third day. Are we going to keep consolidating there, you think?
Yeah, so we had a nice move higher in hogs again, and what I would call is this has been a seasonal move higher that we would have anticipated that we were going to get. We moved higher off of a base that was higher than we thought that it was going to be. As it turned out that we didn't have the hog numbers we thought that we were going to have. However, um, as we get into the spring here, what we're finding is that the market is starting to correct a little bit. It gotten a little bit overextended, and it's very common in early spring after a good initial move off of winter lows for us to take a breather and move back lower. And that really feels like what's going on in the hogs as we're kind of having um, that seasonal spring break that we oftentimes have within the broader rally that we have from winter to summer.
Good. All right. Well, thanks for your analysis. As always, can't beat it with Paradigm Futures. That is Markets Now.